First, futures on the US stock indexes were trading mainly flat, but eventually came into a notable decline. Traders are braced for a series of macroeconomic data from the United States, which could disappoint the market. Market sentiment turned sour due to losses of Facebook stock and jitters in the US Senate. No wonder the US dollar is slipping against its major rivals, including the Canadian dollar. Today, futures on US benchmark stock indexes are trading mixed as market participants have pessimistic expectations for statistics from the United States. At the moment of writing this material, futures on the Dow Jones edged down 0.03%. Futures on the Nasdaq dropped 2.15%, and futures on S&P 500 were 0.79% down. Today, traders are alert to a series of economic reports from the United States. Before the New York session opens, the US Labor Department is due to publish inflation data for November. Analysts expect consumer prices to slow down to 1.1% in annual terms. Besides, the consensus suggests a 0.1% uptick month on month. As usual, on Thursdays, investors monitor weekly updates on initial unemployment claims. Experts project that the number of initial jobless claims could have grown 13,000 last week from the previous one. In a separate report, the Treasury Department will post data on the federal budget balance. Analysts reckon that the United States budget deficit contracted 29.6% from October. Interestingly, today market participants want to play safe after a rapid rally in the stock market. At that time, the US key stock indexes hit historic highs. In the American pre-market, Facebook stock dropped 1.27% following a 2% slump yesterday. Attorneys general from 48 states and the Federal Trade Commission filed antitrust lawsuits against Facebook. They accused the social media giant of anti-competitive practices. The Commission could require Facebook to divest the two apps, Instagram and WhatsApp. In the early European trade, the US dollar was extending weakness. Traders are keeping close tabs on the talks on a post-Brexit trade deal and a stimulus package, which still cannot be settled by the US lawmakers. Other market-moving events are policy meetings of the ECB and the Federal Reserve. The US dollar index showed a 0.1% downtick to trade at 90.95. That is a bit higher than to 90.47, its recent low for 2.5 years. In the meantime, Democrats and Republicans have not been able to come to the common denominator about the stimulus package for the state governments. It means that the state authorities have to keep afloat without large financial aid. Nevertheless, both parties assembled on Wednesday to pass a bill on temporary relief package from the government. Today, the USD CAD pair is trading at the lower border of the downtrend, having shed 0.49%. The currency pair is now trading at near 1.2756. The overall negative market sentiment comes from weakness in the US high-tech companies' shares and jitters in the Senate about the long-awaited stimulus bill. Another negative factor is that analysts are skeptical about the decline in the number of initial and continuing unemployment claims. If the actual figures are worse than expected, this will wreck faint hopes of market participants. That's all for today. We keep monitoring the financial market situation. Subscribe to our channel and see you tomorrow.